Welcome back to For the Culture Crypto, where we bring blockchain to the block. And remember, this is not financial advice. Today, we're asking the bold question: has Bitcoin become too big to crash? With ETFs, institutions, and regulatory clarity, is there now an institutional floor under the market, or is it just false security? Let's break it down. What's going on, D? You ready to get to it?
Ready to get to it, man. Episode 28. We in here doing it.
Yeah,
What's
man.
is there, is there an institutional floor? What does that look like? And we got big players and big money, people into crypto, obviously. So what does that look like? And we're gonna try to relate that to what's happening in society today. Big things are happening across the world as we know, and how would that affect crypto?
Oh yeah, yeah. Looking forward to this one, man. Hey, yeah, let's get into that first one. So question one, what do people mean when they say Bitcoin now has an institutional floor?
Yeah, so as we know, institutions are coming into the market. So we're talking about large asset managers are starting to accumulate at predefined levels. So that would be our institutional floor, right? We have the ETFs created. So that creates a steady demand of flows, as far as capital. Also, long-term capital absorbs panic selling. So what is an institutional floor? We're talking about large asset managers coming into a specific market, particularly crypto is what we're talking about now, and establishing a almost a too big to fail. Even though we saw crypto dip in recent weeks, but the
Mhm.
total market, even you're talking about stocks, everything is dipped. But once again, too big to fail.
So why is this idea gaining traction right now?
Yeah, the reason why is even though Bitcoin had a significant sell-off, even though it's coming back now, I think it topped 68, 69K recently. From We're talking from 62, 63K. But Bitcoin, the market cap significantly is larger than previous cycles. So you're talking about before, when previous cycles, Bitcoin was 5K, 10K, 15K. Now we're looking at 60, upwards of 70K now. And obviously, all-time high was over 120K. Also, major financial institutions publicly are involved now. So we're talking about narrative shifts from speculative tech to a macro asset. So why now? These factors are coming in now. Institutions are coming in. They're seeing what crypto can do, value of it, and this is the reason why now there's talk of institutional floor.
Mm. So how has ETF changed Bitcoin's price behavior compared to past cycles?
Yeah. So yeah, good question. ETFs. So daily inflows are, essentially smooth out volatility. We're looking at passive investment structure, which reduces emotional trading. Also, Bitcoin now is integrated into retirement portfolios. So this is how ETFs are changing behavior. We're looking at now a all-time high that seems almost calm compared to the blow-off top that we had in previous cycles. So we're talking about institutions coming in, less emotional trading, which means a smoother incline than we have in past.
Mm. Okay, so does institutional money actually reduce volatility?
Yeah, so good question. Yes, in some cases, right? There's a gradual buying, as I stated in the previous question. So, but volatility shifts from retail driven to macro driven, right? So we're talking about the shifting in that money and that volatility. Still, it has to go somewhere because there's energy involved in buying of anything. So where does it go? And this is what we're talking about. Also, there's a correlation that to equities, as far as equities increasing. So when we're talking about institutional money, reduced volatility, yes, we have more of a less emotional buying state